If you're just reading the headlines about the Ohio housing market, everything would seem to be A-okay. But I'm tracking something far different than what you're probably hearing from most folks out there. Price cuts are rising throughout the Buckeye State. Check this out. So if we look at the percentage of home sellers cutting their asking price on their house, we are now, according to Realtor.com, now at 21% of all listings. Folks, that's 1 out of 5 homes now have a price cut in Ohio. And this is a number we haven't seen in the last 8 years. You have to go all the way back when you look at July data from Realtor.com. You have to go all the way back to 2018 before you find a July where we had more price cuts. So sellers in Ohio, no doubt, are cutting prices more. But when you go a layer deeper to a zip code level, check this out. Look at 43206 in Columbus, south of downtown. Look at what's happening there. You have nearly 40% of all sellers slashing their price. And it's elevated. There's just no doubt about it. And then look at this, the pending ratio. Basically, that's telling you, hey, there are a lot more sellers in 43206 than buyers right now. Buyers, I mean, that is a buyer's market right now as far as the data is concerned. And look at the days on market. Look how long homes are sitting. 57 days right now. Last July, it was 44 days. In 2024, it was 39 days. Heck, if we go back to 2021, remember that? It's been a long time, it seems like. 22 days. So homes are rotting on the market longer than they have in the last 10 years in 43206. The pending ratio is falling. And look at prices. Let me show you what's happening with prices there. Prices are down as well. Look at this. Right now, down 3% year over year. And you think, well, that's not a big deal, Ohio housing nerd. Well, look, they've been falling this entire year. I mean, if I look at the home value now of single-family houses in 43206, look at this, 294,000 back in July of 2022. But that number started to fall. And it kept falling. Now 270 grand. They've lost $30,000, nearly 30 grand in value on their homes in 43206. I've got another zip code for you. Look at this one. Look at 43227, picking on Columbus today. The Whitehall area. Let's look at the price cuts there. You can see what I mean. Look at price cuts in 43227. Look at this. I mean, 40%, 41% of all sellers slashing their price. That's a 10-year high by far. If I go back before the pandemic, look at this. Only 7% of sellers were cutting their price. Now, 41%, nearly half. Nearly half. And let me go to the days on market, and let me show you what's going on there, because that's also crazy. 34 days, that's elevated as well. If I go back to 2022, it was only 11 days. Homes rotting in 43227. And let's look at prices. How are those actually doing right now? Prices down there too. They're down 3% year over year. The single family home value is falling in the Whitehall area down to $200,000 from the peak in July of around 205. That was last year. So this is all fine and dandy. This is some zip codes. These are zip codes out there, right, that some of y'all probably know. But really, what's happening in your Ohio zip code? Well, I've tracked it all. I'm tracking zip codes, counties, metros, so you can find out what's happening in your neck of the woods. So the way this works, drop your zip code below in the chat, and I will analyze it on today's live. If you left me a zip code on a comment on a previous live stream, you can put your zip code into, and we'll get to those. Quick disclaimer, my name is Jason Ferrier. I am a realtor. I'm an investor here in Ohio. I'm with Kiger Realty. Now, I'm not a financial advisor, not an accountant. I'm not an attorney. I'm just an investor and realtor in Ohio that likes to look at the housing market. I'm just a normal dude. It's a beautiful day. Finally, rain has stopped, hopefully, right? And it's a great day to be with you guys. So let's learn about the Ohio housing market. If you have a question about the Ohio housing market, we can talk about that too, or just the housing market in general. The big bonus for you, though, is that you can use my website to follow along with free data. Folks, no one is doing this. No one's giving this to you. This cost me a good amount of money and took a ton of time to check this out, what I have available for you. So if you go to my website, jasonferrier.com, there's me, right? Great. You can click on data at the top, load in the data page, and you can follow along with us. You can look at this anytime you want, as much as you want. I don't even ask for your email address. And this is all public available data. I source this from realtor.com. I source it from Zillow, Redfin, the Census Bureau. I even pull property tax delinquencies. I've got property tax delinquencies in here that you can look at. I've got permits. You can look at how many permits are going on right now in Ohio. I've got demand. I've got cancellations. I even have pre-foreclosures now. Check this out. Like, you can go county by county and look at Franklin County over the last 3 months and go, how many pre-foreclosures are we looking at? Well, they're growing, I can tell you that. And so this data is for you to use. And at this point, anyway, it's free. So take advantage of it. Look anytime you want. I'm constantly updating this thing and improving it. It's become quite a obsession for me. So anyway, I hope you enjoy that and take advantage of it. So let's dive into some of these zip codes. I'm sure people have them because they always do. What I don't like is realtors posting on the selling websites incorrect info such as square footage, lot size, flood zone, etc. Well, it depends on how they're entering the data. Crazy doxy lady. I don't know how they're doing it, and I'm not sure exactly which ones you're talking about, but I mean, we have to operate by a standard of ethics as a realtor, and you got to put in correct data. So it could be a data provider issue, but always verify. Always verify. I would say Licking County flooding just killed the market there. I'm not sure about that. I don't know if it'll kill it or not. Stuff happens, but the flooding was really bad. And there's a lot of people that are stuck right now, not only in Licking County, but in Muskingum County and Perry County and a lot of areas in southern Ohio and certainly other states. And even in Columbus and Reynoldsburg, seen photos on Facebook from everybody. I mean, it's bad. Water is destructive. What do you got there? I lived in 43230, just north of Whitehall. Back then, nobody wanted to live in Whitehall. Okay, well, you're going to have to tell me if you want me to analyze a market, but I appreciate your input. And by the way, if you put in your zip code, folks, put in what you're doing. Are you buying, selling, investing? What are you doing? That helps me understand to, set the table for the analysis. All right, we got one. Catherine Stanley. What's up? Let's do this one. 44118. 44108. You got it. So I go up to my little address bar up here. Whoops. I was just looking at this zip code a couple days ago. It's crazy you mentioned this. In fact, I was just talking about it with someone today. So what I'm going to do is start with active inventory to show you the inventory levels and what we're dealing with. And then we're going to look at the demand, and we're going to look at price cuts to see what's happening there. And then we'll look at prices. So that's how it'll work. If you have something specific you want to know about in your zip code, let me know. Like if you're like, hey, I want to know about the delinquencies, or I want to know about property taxes or permits or whatever. Some of these zip codes, though, warning, I don't have all the info for because they're too small. But let's start with active inventory. Look at this. In University Heights, that's in Cleveland, Believeland, 104 active listings. That's it. That's all. So you don't have many listings at all compared to last year. In fact, you dropped from 112 to 104. What does that mean? It means that you have fewer homes to choose from. And typically, when you have fewer homes to choose from, sellers have more power, typically. But let's look at the pending ratio, because that'll kind of tell us what's happening. So look at the pending ratio, and you can see it up here, 0.67. What does that mean? That means that overall, it's kind of a balanced market. I would say buyers may have a slight advantage, but it's not a big advantage, according to the pending ratio. And that's really just a measure of how many buyers are in the market versus how many sellers are in the market. That's really what it measures. But you could see, I mean, this was back in July of 2021, Catherine. Back in July of 2021, the pending ratio was 1.34. That means that for every house that was listed, there was over one buyer. So it meant that there were more buyers in the market than sellers. That was a definite seller's market. But then it actually went all the way up to 1.43 in July of 2023, and then down to now 0.67. So the sellers are losing some of their leverage. Let's look at price cuts. How many price cuts we have? Look at this, 22%. That's 1 out of 5 homes are cutting their price. Last July, it was 18%. So sellers cutting prices more than they did last year. This is not seasonality. People will say, well, of course it's going to go up in different times of the year, but we're looking at year over year. So it takes the seasonality out. Now, if you go back to July of 2017, look at this, 30% of sellers were cutting their price. So more sellers, right? But now you still got, a good amount. And remember, Ohio's at about 21%. So you have more than the state average of people cutting their price. So it looks like you have a slight advantage as a buyer there. But let's look at prices and see what's going on. So home value there in University Heights. This is the typical home value according to Zillow, $256,150. And that's up from last year at $252. So while sellers are cutting prices, no doubt about it, in University Heights, they're still up when they actually close compared to last year. And I'm seeing this throughout the state. Statewide prices are still up 3.5% approximately. So this data doesn't mean that prices are going to fall through the floor. It means that the buyer-seller dynamic is changing. And in a lot of these areas, buyers are gaining leverage. So let's look. Yeah, right now, prices up 1.3% versus last year. If I look at July of 2021, look at this. Prices were up 20% year over year. Those days are long gone. You can see that in the chart. That percentage just fell. So that's what's happening. I hope that helped. If you have a question, put it in the chat. Hopefully I'll get to it. By the way, if you give me a super chat, you'll get jumped up to the top of the line because I see it. It pops up right in front of me. And if you're willing to donate to the channel, I'm definitely willing to jump you up to the top of the line. So that's the first one we did, University Heights. That's a good one. Thanks for suggesting it, Catherine. And do me a favor, hit the thumbs up if you come on and share the video with another Ohioan during the live stream. That would help a lot. More people in, the better. Renee. These YouTube names, man. You really want to sound like an idiot? Try to read YouTube names on the fly. 43130. Thanks for suggesting that. You're selling 43130. Let's look. Lancaster. All right, let's find out what's happening in Lancaster. So we'll start with active listings like we did at University Heights. 103. Last year, 112. So you lost some listings, no doubt about it. Now look at back in July of 2016, you had 241 active listings. 241. in July of 2016. So you had a ton of listings back in the day, 10 years ago. That inventory just dropped and it went up a little bit. So you're up slightly in Lancaster since, the depths of COVID when you only had 60 listings, but then you lost listings this year. So you have fewer homes on the market than you did last year. Now let's look at the pending ratio. Yeah, look at the pending ratio, now 0.70. You can see that right there, right on the, I guess, if you look at the screen, up to the right of my head. And that tells you the dynamic. Are there more sellers or more buyers in the market? Well, right now, there are more sellers. More homes listed than actually pending sales happening. And the lower this number gets, the more power buyers have. The higher the number is, the more power sellers have. Just how it works. And it's a pretty good measure of the market. So right now, 0.70. And if you look back in July of 2022, it was 1.4. That's when sellers could do anything they wanted. If a home should be listed at 100 grand or 200 grand, whatever you want to call it, sellers could go, well, I'm going to list it at 250. I'm not going to give you any concessions. I'm not going to pay any closing costs. You want to repair? Tough luck. Sellers had all the control, and that's changed. Now, the demand has fallen significantly in the housing market throughout the U.S. and certainly here in Ohio, and it's reflective in the data. So buyers are gaining some leverage in Lancaster, although you have lost a few listings. Let's look at days on market. Yeah, look at days on market, 33 days to put a house in contract. It was only 14 days a few years ago. So again, homes sitting longer, overall more inventory overall. And let's look at price cuts. "21% of all homes have a price cut." So it's not, 40% like you see in Whitehall, but it's certainly, there are certainly people out there cutting prices. And if I look, it's not a 10-year high, but it's close. Last, July 2024 was a 10-year high at 21%. But it still means people were willing to cut their price. If you're finding homes that are sitting on the market and people are cutting the price and they're not taking them off the market, that's a hint that seller needs to sell. That's a hint the seller needs to sell. And those are the folks that are willing to negotiate the most and probably where all the opportunity lies. If you see no price cuts or the person yanks their home off the market because they can't get the price they wanted, probably because they're delusional, right? Well, then they probably really weren't serious anyway, and you weren't going to get a deal from them regardless. But that's what's happening in Lancaster, slowly starting to turn towards a buyer's market. But man, you got to see more inventory. The cure for all of this is more homes for sale. The cure for high prices is more supply, not high prices. It's more supply. That gives us lower prices. All right. Thank you, Renee. Crazy Docs. Crazy Doxy Lady. 43056. Let me look at that one. Heath. Fellow Licking County resident. Let's find out what's happening in Heath. Heath's a tough market. I mean, there's nothing available. Only 26 homes right now for sale in Heath. 26 homes. That's insane. I mean, your inventory really has not recovered. I mean, it's trying to recover, but it's not really. I mean, you had 11 homes, 10 homes in 2020. I remember helping some people buy homes in Heath in 2020. There's like nothing. Almost all the homes were going over asking, all of them. That's a function of supply, folks. Look, yeah, I mean, you've lost a good portion of your inventory over the last couple of years. But the demand isn't through the roof because your pending ratio is only 0.69. So it's not really a massive amount of demand that's causing the inventory to fall. And my guess is sellers just aren't listing. They're just not listing because it costs a lot more to move, right? So they're like, why would I sell my home with a 3% mortgage rate or 4% mortgage rate and try to buy in Heath again or somewhere else where it's expensive, right? Let's look at the price cuts. 25%. So the ones on the market are cutting their price a quarter of the time. 1 out of 4 homes cutting their price. Every market's different. And that's a 10-year high of price cuts in Heath. 10-year high. What about days on market? How long are homes sitting? 32 days. They're moving quicker than they were last year, so they're not rotting necessarily, but they are getting price cuts. Let's look at the value. How much are homes in Heath? It's unreal. Never thought, over the last 10 years, never thought I'd see the day when homes in Heath, the typical house, was 317 grand. Licking County's off the charts. The prices in Licking County have gone parabolic. And they've gone parabolic in a lot of places in Ohio, but Licking County is getting crushed. $317,000. I don't know that this is going to come down anytime soon, honestly, unless you get a lot of supply and forced selling, people being forced to put their house on the market. I'm not sure this is going to change anytime soon. It may not. What's that up? You could see this graph really take off, right through here. Look at this. Over the last few years, look at these. This is the appreciation of home prices in Heath every month. July of 2021, they were up 18%. And July of 2022, they were up 13%. Now, you can see that trend is down, right? So the growth is slowing, but now it's reaccelerating. It always does during the summer. But it's at 4.3%. So homes are still going up every month, year over year, 4.3%. It's nuts, right? By the way, I do have condos in here now. I have condos broken out with prices. I don't have condos broken out with inventory. That data is not available, but I do have it with prices. So the typical condo in Heath is 313 grand, close to the single family home price. Anyway, that's what's happening in Heath, Ohio. Thanks, Crazy. Kevin, checking in from Facebook. What's up? 45424. Where's that? You buying? You selling? What are you doing? $45424. Did I put that in right? 45424. Huber Heights, Montgomery County. Yeah, let's go to that. Active listings, 88. And that's up 24% from last year. So last year you had 71 homes for sale in your zip code. This year, 88 homes. Now look at this. Look at the pending ratio up here on the left. Or it's actually, I guess, above my head. You can see it's 1.03. That means sellers have more control than buyers, because for every home listed, there's at least one buyer, if not a little more. Barely. So basically it's one buyer. So it's a 1-for-1 ratio. So sellers definitely have more control than if you were in a market where it's 0.69. Higher the number, especially further over 1 you get, the more sellers have control, the hotter the market is, I guess you could call it. Let's look at, we looked at pending ratio. Let's look at days on market. 33 days last year, 29 days last year. Homes are sitting longer in Huber Heights. Not by much, about normal time, right? You're getting to take a month to put a home in contract. That's kind of normal. Back in 2021, it was 8 days. 8 days. Thank goodness those days are over. But let me go back to pending ratio real quick and look at this, because this popped out to me. Look at that. That could be the stat of the day. That could be the stat of the day, Kevin. In July of 2020, the pending ratio was 4.88. I know, For a housing nerd, that means a lot. For the average person, they're like, I don't care about that. What does that mean? That means for every home listed, there were nearly 5 buyers for every home that was listed then. I mean, that's the pure example of FOMO. I would call that the Instagram effect during COVID. Sitting on my couch, my buddy bought a home. Hey, babe, we should go out and buy a home. And you overpay. I'm not saying you did that, but a lot of people did. So that's maybe one of the higher numbers I've ever seen in Ohio. I mean, that's a lot. I mean, the demand was through the roof and there was no homes to buy. Now that's fallen. Look at that, 1.03. So sellers still have a slight advantage, but nothing like they did back in 2020. I mean, this chart shows you, Kevin, exactly what happened in your market. It went parabolic. Literally, demand exploded from 2019 to 2020. And then since then, it's been coming back to earth. Let's look at prices. How are they doing? Oh, we got to look at price cuts. We didn't look at that, did we? No. Look at price cuts. 24% of all sellers cutting their price. Now, what I'm tracking through all this data is that you'll probably see price cuts moderate as sellers become more accustomed to listing their home correctly on the market, right? As people kind of grapple with the fact that, all right, this is not 2020 anymore. We're going to have to price our home a realistic way, not be greedy. We'll probably see these price cuts come down because people will list their home at a more reasonable level. That's what I think will happen. But you let me know. You tell me what you think. Let's look at prices. How are they doing? This is great information. I'm excited that you mentioned the zip code. $230,000 right now. Last year was $222,000. That's an increase of 3.4%. Now, pro tip, if you use my website and you look at this data, you can click on a particular dot or time period and then click on the next one and it'll automatically tell you the difference. So see here from July 20, whoops, I don't even know how to use my own thing. From July of 2021 to July of 2026, prices are up 33%. You can see it in blue there right below the number. Hopefully you can see that, but that calculates it automatically. So if I look at year over year, it's up 3.4%. So home prices up 3.4%, not falling, not crashing. Let's look at how, I mean, yeah, you can just see the chart. They haven't been falling at all lately. The last time you had a price decline was back in 2015. That's the last time prices fell year over year. The Ohio market is off the hook. It is off the hook. Thanks for mentioning that, Kevin. Thanks for watching us on Facebook. Appreciate it. Metals. Metal stacker. Having a good week, aren't you? You're having a good week. I think it's a good month, right? In gold. You stack Bitcoin, having a good week there too. Great couple days. 45133 Hillsboro. Let's do it. 45133. If you're just joining us, drop your zip code below. Hopefully I'll get to it. And you can go to jasonferrier.com, my website, go to data, and you can pull this stuff up too for free anytime you want. All right, active listings in Hillsboro, 45133. What's happening out there? 67 homes on the market. Last year you had 61, so you're up 10% with your inventory. You are growing homes for sale. That's good. But look back here. Look at July of 2016. You had 113% more homes for sale. You had 130 houses back in 2016. Now, to be fair, we were coming out of the great financial crisis. So the US, Ohio, everywhere pretty much was overloaded with inventory. But then it was falling. Your inventory falling a lot. So not a lot for sale back, if you go all the way to your low in July of 2023, only 22 homes for sale. Now you've got 67. So you are growing the inventory. That's good. But it's hard to know if you have enough yet. What's interesting is look at your pending ratio. Look at that, 49.49 right up here, right? So this means that even though you're growing inventory, or the fact that you are growing inventory, your demand must be must be low because there's not even one buyer for every home listed on the market. If it was one, if this number was one, like we saw just a minute ago, you would see that means that basically one buyer for every home out there on the market. But this is half. So demand must be falling. Look at this. Back in July of 2021, it was nearly 2. That means there were 2 buyers for every listing. But sellers were in control. Now buyers gaining leverage. Buyers are gaining leverage. And it's probably about, it's getting close to normal. Look at 2018. 2019 was 0.68. 2018 was 0.43. So you're starting to get back to a more normal market, although you do need supply. You definitely need supply of homes. Let's look at days on market. How's that doing? 45 days. Last year was 54 days. So homes are moving quicker where you are. That's for sure. I wouldn't say that's a big warning sign yet. What about price cuts? 20% of all sellers cut their price. That continues to be somewhat elevated. So there's probably opportunities there for people that are looking to buy. Did you tell me if you're buying or not? No, you didn't. If you're looking to buy, then you could probably find an opportunity if you're diligent, look at a lot of homes, you're patient, you don't mind writing a low offer. You don't want to, don't worry about offending somebody. This is not, you're not going to get arrested for sending in a low offer. So that's price cuts. Let's look at prices. How much are homes there in Hillsboro? $217,000. Last year, $205,000. So that's a growth of nearly 6%. Nearly 6%. Your home prices continue to grow. Now, one of the reasons why could be because your homes are only $216,000. Right? Now, that's the typical home. That's like the middle range of the houses. That's not the most expensive. It's not the cheapest. But that growth is there. I mean, you are definitely growing prices still. But watch this inventory number, folks. This is the number to watch. Watch your inventory. If you see this continue to go up and up and up, then prices are probably going to fall at some point. So if like this 67 became 100, the prices would probably look different. If it went over 100, you'd probably see a lot more price cuts, a lot more price decline, or price decline period, because right now you're not seeing any. That's nothing new. That's Ohio. Right now anyway. But thanks for your comment. Oh, metal stacker. Okay. You're wanting to sell and move near Grove City. Okay, great. Well, hey, I'm in the Columbus area. If you need help buying a home, just just a chat, a free chat, talk about some strategy or kind of what you're looking at. I'm happy to do it anytime. Just hit me up on my website under contact. So if you just go to my website right here at the top and click contact, you just put in your information, I'll reach out to you. And that's much better than sending me an email or calling me, because this keeps it all organized for me. So go back to the data and we'll keep going. Oh, but wait a minute. You want to move near Grove City. So let me just look at Grove City real quick. 43123. Let's use that one. So this is where you're going, right? 43123. I'll do this one real quick. So we'll do active listings. They got 148. Last year, 148. Inventory's flat, but you're elevated compared to a few years ago. I mean, look, in July of 2020, Grove City only had 65 homes for sale. Now 148. Wow. But look at the pending ratio, nearly 1. So there is still some demand there, no doubt. Let's look at where it's traveled. Well, the pending ratio is down compared to a couple years ago when it was over 1, and certainly compared to 2020 in Grove City when it was 2. So that's when demand was crazy. Sellers were calling all the shots. So while it is nearly 1 on the pending ratio chart, it has fallen. So it's not as crazy of a seller's market than a few years ago. I hope that makes sense. Let's do days on market. How long are homes sitting? Look at this, though. This is good news if you're buying there. 33 days. So homes are definitely sitting compared to last year. And it's a 10-year high for homes on the market on how long it takes to sell it for time on market. I'm not saying that right. For days on market. Let's look at price cuts. Yeah, 22% of all sellers cutting their price. Not a 10-year high, but close to it. So I would say there's probably opportunity out there. You got more listings, right? Days on market's up. Price cuts are there. Single family home value, $348,000. That's up what? 2%. So prices haven't crashed by any means, but in Grove City, but kind of the it's cooling, I would say. But not down yet. Not down. And we probably won't see that this year. Probably a while. But thanks for checking in. Rick GTR. Rick Guitar. I get it. I can see your thing. I get it. 271. I feel like I'm stuck in 44052 because I want to sell, but all other homes are far too expensive. Welcome to the club, dude. This is why the listings aren't there. This is exactly your situation, Rick. Thanks for bringing this up. This is exactly why there's no inventory. I mean, there is inventory and it's getting better, but it's why there's not more homes available, especially starter homes, because people are like Rick, like, why would I sell? So you are stuck. It's probably not that you feel like you're stuck. The math doesn't math. I don't know what your interest rate is, but most people, majority of people, have a lower interest rate than what you can get now. Why would you trade that in? Especially if you bought years ago, right? Why would you trade that in for a higher priced home at a higher interest rate? I mean, it's your choice. You could do it, but mathematically, it probably doesn't work, right? 44052. Let's look at it. I love traveling around the state here. Find out what's happening. In Lorain, all right, we got 56 homes on the market. Last year, 55, no inventory at all. I mean, your bottom was 35. I mean, this is what I would call the supply destruction of our housing market in Ohio. And not all housing markets are the same. If you go to Texas or Florida or many other states for that matter, Colorado, everywhere basically except the Midwest and the Northeast, pretty much. There are tons of homes for sale compared to last year. I'm sorry, compared to 3 or 4 years ago. Year over year, not a ton. But over the last few years, there's been a lot of inventory growth throughout the U.S. But here, like in Lorain, 44052, no, hardly any growth. I mean, you got one home. You're kind of just stuck. And look at this again. Go back to 2016. You had 145 homes on the market. 145? What? Yeah, believe that. I mean, your inventory's been destroyed. What about days on market? 34. Homes are selling quicker. That's accelerating. Yikes. What about price cuts? And that basically means homes are selling faster than last year and the year before. Price cuts only 13%. Only 13% of homes have had a price cut. So while the pending ratio is 0.63, and let me look at that on a chart, which sounds low, and it kind of points to buyers in this little gauge here. I'd probably have to change the formula on that chart to make it a little more realistic with the data, I think. But you had a 1.54 pending ratio back in 2022. Sellers were in complete control, and that's fallen significantly. So buyers have gained leverage, but based on what I saw with days on market and price cuts and inventory, it sure seems like sellers are still in control there. It does. Single family home value, 143,000. Maybe that's why, because homes are, no offense, I mean, on the typical house is $143,000. So aren't many spots around the US and even in Ohio where you can buy a home at 143. That's the typical house. I'm not saying that's your house, right? That's just the typical house. And then what is that year over year? 5%. I mean, think about it. Ohio is only growing at 3.5% with prices. The US in some data series is barely growing, like it's like 0.5% up, or basically flat for the US housing market. And Ohio, in this zip code, Northern Ohio, is up 5%. Everything we've seen today is up. I mean, Ohio is brutal with price growth. It just continues to go and go. And again, until we see more inventory, I'm not sure we're going to see a change in that. I really don't. So let me see if I can, I don't think I can look at this on a zip code level, but let me show you this. Look at the county level in Lorain County. Remember your inventory, Rick, you had a lot more inventory in 2016. Look at it for your county level, and I'll show you what's really happening. 1,300 listings back in 2016. You had 1,300 homes on the market in the whole county. Now in the county, you only have 523. And people go, why is that? Why are we not seeing as many homes on the market? Well, one reason is this. Look at the single family permitting. Look at the single family permits. How many homes are they building in Lorain County? And this is, the way this works is it's the number of single family permits per 1,000 residents. So it's a ratio, right? It's like, hey, for every 1,000 residents in June of 2004, there were nearly 7 homes being constructed for every 1,000 residents. Look what happened. When the great financial crisis took place, builders stopped building. And it started to recover, but really hasn't. So as of June of 2025, that's the latest data I have from the US Census Bureau, it's 3. There's only 3 single-family permits per 1,000 residents. They're just not building. And so when you look at the active listings falling, and now you're like, well, when are they going to increase? I don't know. I mean, unless they start building again. What's really interesting, if I look at the multifamily, where are they at? No, multifamily is not really exciting either for you. So single family permits just aren't there. And you're actually not that bad, honestly, for Ohio. A lot of areas are under 1. They're not building at all. 0 homes, basically. Ohio does not build new homes, folks. People will tell you they do, or you'll get this idea they do because you'll drive around and see them. But when you look at the data, you're like, man, they've shut off the faucet. Anyway, hope that helped. Probably more info than you needed. But if you learned something, give me the thumbs up. Christine Zimmerman, what up? 44320. I got fresh pricing data and inventory data, so let's look. See, the difference between y'all versus the average person out there poking around Zillow or something is that you're taking the time to understand what's happening. It doesn't, that's a big deal. You should be glad that you're taking some time to understand it versus go, oh, I saw a Facebook post. It's a good time to buy. What does that mean? Right? 49 listings, Christine. Last year, 48. No growth of listings. You're just stuck, right? You got nothing. Got no homes. Got no homes. Pending ratio 0.73. So buyers are gaining a little leverage, but it's probably still a seller's market. Probably still is. Days on market. Yeah. I mean, it's 40 days, which isn't that low. I mean, it's, put a house on the market, takes 40 days to go into contract. Okay. There's nothing wrong with that. Last year was 41, so homes are not rotting on the market. It's not like all this inventory is just sitting there. What about price cuts? 21%, that's elevated from last year, but basically 1 out of 5 homes cut their price. Back in 2020, again, 9%. Hardly any price cuts. Let's look at prices. Single family home value, $112,000. Did I get the right zip code? Yeah, okay. $112,000. Last year, $112,250. We found one, folks, where prices went down. Look at this. Prices down 0.4%. Not a big change, $1,000, but they did go down year over year. I don't run into many spots where prices are down at all. So they're not crashing, right? But they're not going up right now. Again, I would really watch that inventory level. Now look at this. In July of 2020, the typical home in your zip code was 72 grand. And now 111,000, that's a 53% increase. In 1 year, it went up 31% from 2020 to 2021. I mean, that's not sustainable in a year. And then it kept going all the way up to 115 grand. Now it's fallen back to 112. So it is off 3 grand from the all-time high in July. Right? How far of a dip is that? 3%. Woohoo! Well, it is. I mean, I'm not glad if your home value went down. I'm not saying that, but I don't see many home price drops, where values are falling. I'm not seeing that a lot. So to see one, it's like, well, look at that. I would watch that inventory though. Watch it. Watch it closely. It's really, honestly, it's surprising. I mean, you haven't really gained that much inventory, but your prices are starting to level off. Maybe the neighborhood just can't hold anymore. Let me look at I don't have what county is that? Let's look at Summit County, right? Yeah, I mean, the inventory is not exploding throughout the county. I mean, it is up. I can't say it's not up. It's up 7.5% from last year countywide. And if I go back to 2023, that was the low. It's up nearly 70%. So you're definitely gaining inventory. I was curious about the tax delinquency. See if I have that. Wow, tax delinquency, only 1.71%. That's low. 4,793 tax delinquencies in Summit County. What about pre-foreclosures? 971 pre-foreclosures right now in the county. Last year, 957. The year before, not last year, last month in June, 957. In July, I captured the data last week. For July, it was 971. And then in May, it was 864. So you are gaining pre-foreclosures. This tax delinquency thing, though, folks, is I'm finding all kinds of problems with it because they're selling the tax liens to out-of-state investors. So tax delinquencies are falling in a lot of cases rapidly because I think Summit County had a lot more at one point, and now I'm not seeing them. I was just wondering if that's driving some of the price decline, but the tax delinquency isn't crazy. I have to keep an eye on that one. Thanks for joining us, Christine. Give me a thumbs up. You always do, I'm sure. Chuck, what up? 45066. Let's do it. 45066. Springboro. Active listings 64. Last year, 48. So you got more inventory. Good for you. You're gaining homes on the market. Let's look at that pending ratio. Where has it traveled? It's down here at 0.75. You peaked for July in 2020 at 2. Again, that means every home on the market, there's 2 buyers. Sellers were calling all the shots. And then they lost leverage, and now they're down to 0.75, starting to probably become more of a normal market. Days on market. How long are homes sitting? 47 days. Last year, 35. So it's up compared to 2021 when there was only 18 days. Homes were moving, pretty quickly. Now they've definitely, it's been slower, right? People are taking their time. Not as much demand. Interest rates are higher. Buyers don't have as much FOMO as they did back in 2021. Watch that inventory, though. Watch it. Let's do price cuts. 22%. Last year, 21.7. So not up that much. It's not a 10-year high, but it's elevated compared to COVID levels when there's only 7% of people cutting their price. There's no discounts going on. Now it's 22%. So over 1 out of 5, listings have had some type of price reduction. There are markets in Ohio where it's 40%. I looked at that at the beginning. I saw one that was 48%. Half of all the listings had a price cut. Those are the trouble spots, right? As long as they have inventory. If there's only like 2 listings, it doesn't really count. Let's look at prices where you are. 450. Last year, 448. You're up just 0.4%. So maybe what's going on is that the counties that have, somewhat lower home values are still going up a lot. It's just a theory. You let me know what you think. And areas where homes are more expensive, $450 for a home in Ohio is on the upper end, no doubt. Maybe those are the areas where prices aren't going up as much or declining slightly. Although we just saw one that was nearly 100, 100 and some thousand, and it was declining. So I'm probably wrong. But prices basically are stuck. You're not going up. You're not going down. Yeah, look at this. Break down through here. If I change this chart to this, you can see it. Whoops. I changed the chart through this. You can see back in 2021, prices were up 16% versus the previous year. That can't stay. That's not sustainable. But then that fell, and now you're looking at just a 0.4% increase. So, I think at some point, the neighborhood and the buyers are like, that's it. I can't do anymore. So prices barely go up when they close. And it's probably a sign that maybe some sellers are actually pricing homes in a reasonable way. What about condos? Where are you with condos? 437. Last year, 435. So condos are up 0.5%. Same story. But condos are expensive there too. What about your permits? What's going on let me look at your county permits. How many homes are they building? That's Warren County, right? It's a big county. Yeah, here's your county inventory. This is a great shot. Again, come to jasonferrier.com, go to the data section, free. You can look at all the same thing. That's what I'm using right now. No special hidden data. But look at the inventory swing you had in the county. Chuck, look at that. It's like, you can just see it kind of swooping upwards again. 629 active listings. Back in 2016, you had 1,121. You're still not back to that level, but you are gaining homes for sale. You have more than you had pre-pandemic, or no, you don't, not yet. Not yet. Pre-pandemic, you had 795. So right now, 629. Let's look though at permits. I'm curious. Total permits. What do those look like? Yeah, that's what I figured. So back in the 2000s, early aughts, look at that. 19, 21. Wow. So back in what is that? 1999, they were building 21 homes per 1,000 residents. But that got shut off, right? Because the great financial crisis, builders were like, nope, we're not going to build anymore. And they really haven't until you get to June of last year. It actually rose to 9 homes. I'm sorry, 9 building permits per 1,000 residents. But that's total permits. Look at single family. Where's that? That's only 5. See the difference? See, did you catch that? That was 5. Now look at multifamily, 3.37. So it's not that they're building 9 homes per 1,000 folks. They're building 9 units of anything. But when you separate it to single family homes only, it's 5, which is about where you've been. So it's not really a rise, honestly, historical rise. And this is why inventory is struggling. Anyway, Warren County is like kind of it's an expensive county. A lot of people talk about it. So I thought I'd look at permits. But that is Springboro. Let's do the next one. Oh, you had jumped in, Metal Stacker. 45133. Yep, I looked at that one. I want to sell and move back to the Grove City area. Love Grove City, but it's crazy the prices there. Yeah, hit me up, on my website. I'm happy to have a conversation and see what you're looking for and if I can help at all. Oh, look at this. Y'all, shout out to Jessica Baker. This woman is awesome. She's a fellow realtor, but that's not only why she's awesome. She's awesome because she's the one leading the effort. And there's a lot of people involved with her, so I don't want to take away from anything anybody else is doing. But she's my main contact anyway for the data center ban, the abolishment of data centers in Ohio. She's the one pushing that I've been talking to. So give a shout out to Jessica. Thanks for jumping in, Jessica. This is great. Yeah. How are the rural zip codes where data centers are proposed? I've been watching this. So far, I haven't seen anything bizarre in the data. Probably because, there isn't, first off, there's not a lot of data in those rural areas, but the data centers haven't been around long enough in some of these markets. So, but let me look. 45144. Now, again, pro tip here. If you come to my website, you can scroll down to the bottom and click this button, data centers, and it populates where all the data centers are. Now, I probably don't have them all. I'm probably missing some, but I'm working to get them all in here. But you had said, what zip code? 45144. Yeah, let's look. I may have to do the county. Manchester in Adams County. Yeah, so I don't even have that data center in there yet. There's only 16 homes on the market. Yeah, it's going to be really hard for me to tell anything because there's just not a lot of inventory. But because it's a rural county. Let me do the county. Look, let's do Adams County in general. 82 listings in Adams County. Last year, 76. So there's a little more activity, a little more listings. But back in 2018, there were 128. Let's look at the pending ratio. Again, measuring the ratio of buyers and sellers. How many buyers are there versus how many sellers? 0.4. Now, to be fair, it went up to 1.19, meaning sellers had all the control back in 2021. That's fallen as it has throughout Ohio. But this 0.4 tells me that it's probably trying to get back to a normal market. Although demand isn't crazy there. It's not like demand's through the roof. But let's look at price cuts. How many price cuts? 17%, yeah. So I wouldn't think sellers are desperate. I mean, days on market is not elevated, so the homes aren't rotting compared to 2020 when there were 71 days, even 2018 where it was 64 days. Let's look at prices in Adams County. Yeah, $191,000. Last year, $186,000. So prices are continuing to go higher for longer there. They're up 2.3%. So they're not skyrocketing, but they're not crashing. I don't know. What do y'all think about data centers in the housing market? Will we see, a lot more homes being constructed near data centers? I don't think we will right now, not in rural Ohio. If you're in New Albany, sure, right? Although there's not a lot of new building there either that makes any sense. I think this, the fact that data centers come to the area may drive up home values and rental prices for a period of time until the construction workers leave anyway. That may happen. So we'll have to watch this. You may have a rapid increase and then down, right? Maybe a little too early to tell, but let's watch it. Let's watch it. So here's one right here. I think this is that SoftBank facility, but I thought that was in Adams County. Oh, no, that's in Pike County, isn't it? That SoftBank facility. I need to put more data in here on what this is. But let's look at home values in Scioto County near that big data center. 148,000 last year in Scioto County, 136,000. That's a decent increase. 8%. So maybe we'll see that in these rural counties where there's nothing to buy, old homes, right? And quite frankly, you end up with a situation where workers come in and they're like, I'll rent it and pay way more than normal because I need a place to stay. So there has to be some of that going on. But in Adams County, maybe it's just not being reflected. So hopefully that made sense. Thank you, Jessica, for jumping in. I appreciate it. And thank you for all you do. I'm sure all the folks on here definitely appreciate your efforts with the data centers. Folks, she does that because I think she just cares, honestly. And if you're in Adams County or that market, give Jessica a call if you're looking to buy or sell a home because she needs your support, quite frankly. Good to see you, Jessica. All right, what's up? Grove City is an active edge to the dense urban area of Columbus. They aren't any large suburbs of South Grove City. The small farm towns are budding, but not where landlocking Grove City. Okay. What's up? I'm not going to try to pronounce your name. I'm going to call you Here. What's up, Here? 44880. I always make a fool of myself when I do that. 44880. Sullivan in Ashland County. Okay. Not a lot going on there, so I'm going to go to a county level. All right. And there's only 75 listings in the whole county. Only 75 listings. Last year, 69. Again, same problem. Not a lot of inventory. And probably a good amount of the inventory you have is old. And just a reminder, folks, tell me what you're doing. When you enter your zip code, tell me if you're buying or selling or what you want to know about. That helps me rather than just ramble. 75 listings. Yeah, I mean, inventory is so bad there. Look in 2022, you only had 52. You've barely grown your homes for sale. Look back in 2016, you had 192. Wow. Wow. And look at the pending ratio. Oh my goodness. COVID really wrecked you. I mean, in 2019, right before COVID, it was 0.31. So buyers had the upper hand then, and it went way up to 2 in 2021, meaning there were 2 buyers for every 1 home basically on the market. And then that fell as it did throughout the state, but you're still pretty elevated, nearly 1. You're at 0.97, so sellers probably still have a lot of control of the market. Yeah, days on market, only 34 days. That's not skyrocketing. In 2016, it was 60 days. You can believe that. So homes still kind of selling in a decent clip. Price cuts. How many people are cutting price? Only 20%. It's about where the state average is. Look at that. In 2021, it was only 4.5%. I mean, that's like less than 1 out of every 10 homes. It's like 1 out of every 20 homes had a price cut back in 2021. No price cuts. People were like, I don't have to cut my price. I should raise my price. And then that price cut percentage went up, obviously, coming back to normal levels. But let's look at prices. Single family home value, $249,000. Last year was $236,000, so you're up 6%, 5.5%. I round up to 6%. I mean, that's, again, that home price growth is crazy here. I mean, if you're beating inflation on your home price growth. Well, the stated inflation from the government, if we all believe that. But if inflation's running at 3.5%, you actually have a real home price growth for your area, for your county. Now let's just check out, because I'm nosy, I'm going to check out single family permits in Ashland County. Wow, look at that. They were building. I mean, back in the late 90s, shout out Gen X, like you were building. And then in the 2000s, still building somewhat, right? You had 3 homes being built for every 1,000 residents. And then builders just shut the faucet off because we had a ton of inventory, right? And they really, I mean, they've started to build a little bit more, but not anything meaningful. And so if you think about that and you go, well, they're not building single family homes. Are they building multifamily homes? Let's look. No, they're not doing that either. So if you think about that aspect of not building, and then this inventory situation in the county, the entire county, 75 homes, where are you going to get the inventory? Where? It's going to be created out of thin air? No. So you're going to have to wait for some kind of rogue builder to build a couple houses or an existing house to come on the market. I'm not saying they're not building any homes, but they're certainly not building like they were before, and it's reflective in your in the data. I mean, look, when they were building all those houses was like the early 2000s, and you can see the remnants of that right here in the active listings in 2016 at 192. So there were 192 homes on the market, you know, because you're kind of coming out of where all the supply was built, and then people bought it, right? As the economy improved after the great financial crisis. So unless there's like forced selling, massive job loss, you know, people are like, I got to sell or I'm doomed. Unless that happens, I don't see inventory rapidly increasing there. And prices probably won't come down. If they do, they may not come down hardly at all. Wow. Thanks for suggesting that here. That's what I'm going to call you. Evil Overlord. 44240. Let's do it. And if you're in, give me a thumbs up. Share the video. Helps tremendously. Gets other people involved. Share it with another Ohioan that's like, hey, what's happening with the housing market where I live? Let's find out. And if you want to know about the national housing market, tune in on Thursdays because I do the national one on the other channel. 44240. And we can and we talk about all kinds of markets. Kent, right? Let's look. Now your inventory, man, it's just stagnant. You had 3 homes, right, come to market more than last year. So you really still don't have any inventory. You really don't. Let's look at it. I think we always look at your zip code. So let me just look at the county in Portage and see if we can see another trend. 185, you lost inventory countywide. You lost inventory. And look, back in 2016, you had 523 homes on the market. 523. Wow, 523. I mean, the difference is just nuts in some of these numbers. But let's look at your pending ratio and see what's happening. How many buyers, how many sellers, who has the power? 1.18. It's going back up. And so sellers look like they are in control. That's what it looks like, especially with the inventory you got, right? Days on market down to 31 days. Homes are selling quicker. There's not a lot of inventory. Price cuts. What's happening with price cuts? 15% of all sellers cutting price. That's not a lot either. Not a lot of price cuts. Days on market isn't high. Not a ton of inventory. Your pending ratio is way over 1. Yeah, it tells me that sellers are still like, hey, I can do what I want. For the most part. Single family home value, 284. Man, it's just like parabolic. Last year was 270, so you're up 5%. Higher for longer, man, higher for longer. Now let's look at permits. What's happening with single family permits? Similar story, right, than where we just were in Ashland County. I mean, you were building in the early 2000s. You can see this, right? 5 homes per 1,000 residents back in 2003, and then they shut the faucet off. They tried to gain some right before COVID, but now the latest reading is 1.21. Barely building. Barely building. What about multifamily? Not a lot there either. Multifamily permits only 0.13, basically none. I mean, that's the fact, folks. People are not building in Ohio. Not like they need to if they want home prices to be somewhat sustainable from an affordability standpoint. And it's just getting worse because most homes are old. No bueno. All right. That was Portage County. Thanks for checking in. Evil Overlord. Who's next? Who can afford the inner suburbs like Worthington, Grandview, Marble Cliff, Upper Arlington? I mean, there are people that are buying homes. People can't afford them, no doubt. Not everybody, but there are buyers there. And many times they're selling another property, right? Maybe they've been in the market a long time. But yeah, they're just more expensive. But people are buying in those suburbs. Although I am seeing some of the more expensive suburbs, like, if you go to like Delaware County or Dublin in central Ohio anyway, I'm seeing that start to soften as far as prices. They're kind of leveling off a little bit. So for instance, if I look at, it's a good idea to look at this. If I look at Dublin, you're not going to let me search by the name, huh? Watch. If I go to Dublin, let's look at 43017 in Dublin. Active listings 87. Last year 79. So they have a little more homes for sale. Let me look at yeah, we'll look at that one. Let me look at this one. Yeah, 43017. So 87 homes this year, last year 79. They have a little more inventory, right? But you want to know about price. So let's look about price. 643. So year over year, they are up 1.4%. So I was wrong. They're still going up there in Dublin. Let me look at Delaware County, though. You know what? One we could look at would actually be Plain City. Let's look at Plain City. Yeah, look at the inventory in Plain City. It's gone up a lot from 80 to 97. It's up 21% in Plain City, the number of homes for sale. Now, if I look at the pending ratio, what's that look like in Plain City? 0.72. So it's a little bit more of a buyer's market than last year. And certainly when there was 2 buyers for every home in 2021, right? That was nuts. Let's look at prices though in Plain City. Last July, they were 553. This July, they are 556. So they're up 0.6%. Now, that they're not falling yet, but they're not going up 3 or 4 or 5% anymore. And they're not keeping up with inflation. They're kind of just stagnant, almost like stagflation type environment. But what about permits in Plain City? I have to look at the county. Let's look at the county, right? It's Union County, right? Let me look at permits. Yeah, so look at this difference in permits. We've been looking at permits today, 14 single-family permits per 1,000 residents. That's where they're building all the new homes. And by the way, you can look at this map and just go to permits if you wanted, right? If you're a data nerd like me, you can go to permits per 1,000 folks, and you can kind of just zoom out here and look at where all the permits are. Let me take out the data centers for map reasons. But yeah, like Union County, 9 single-family permits per 1,000 people. Delaware County, 8. Franklin County, 1.4. They ain't building. Licking County, they ain't building. Logan County, they're building, right? A little bit more. But Union County and Delaware are where they're building a lot of the houses. Madison County, they're building. Pickaway a little bit, right? Even up in Cleveland, they're not really building new homes. I mean, there are new homes, not like there's none, but it's not anything that we need. So it's almost like all the building is concentrated in central Ohio. And they're expensive. I don't have new home prices in here, but they're usually expensive. Anyway, that's what's happening in those, I guess, outlier areas. Thanks for asking. The Heath market collapsed when that new subdivision was scrapped because the homes would be in Granville School District. Man, I haven't touched that one yet. I live in Granville, and there's a lot of various opinions on it. Yeah, I don't really want to go there. But it's, well, if you look at the Heath supply, if you look at the Granville supply of homes, then I'll ask you if we need more homes. And it costs money to build homes. It's not free. So my guess is at some point it will expand. I think it's inevitable that that will happen, that we'll put a subdivision there. I mean, developers aren't stupid. So we'll see what happens. But there's nothing for sale really in Granville usually. And right now it's still the same problem. And the ones are for sale are very expensive. So it's like, you need more homes. But I get it. People don't want to pay higher taxes. And I get that. What's up, Lone Alexander? Could you review 44147 and 44141? I'll pick one. 44147. Is that the better one to review? Let me go to active inventory here. That's Broadview Heights. Let's go. What's your other one? 44141. Let's try that one. That's Brecksville, they say. That's only 22. So let me try Broadview Heights. I don't know if we're going to see a lot from here. I mean, there are some homes on the market. 28. Last year, 25. Not many. I mean, you got 3 homes. You only picked up 3 homes. Now, you say, well, that's a small zip code, right? Which maybe it is as far as activity. But look back in 2016, you had 86 houses for sale in 2016. That's a lot different, right? Money, you have a ton of listings then. Comparatively, now only 28. You really have not recovered out of COVID. I mean, your inventory fell and never came back. And you can see it in the pending ratio, nearly 1. So there's definitely more of a seller's market there. Let's look at that pending ratio and see where it traveled. Yeah, look in July of 2020, it was 2.6. So 2.5, over 2.5 buyers waiting in line with their hand up for every home on the market. Now, basically 1. So it's cooled, but it's still a seller's market, I would think. Days on market, what's happening there? Yeah, I mean, with just a few listings there, I don't know if we'll see a trend, but 43 days on market. Last year, 32. So homes are sitting a little longer, but you go back in time, it's about normal. Actually, a little low compared to normal. Price cuts, only 20%. Sellers aren't desperate there. It's reflective in the price or the pending ratio. Let's look at prices. 433, and that's up 4%. I'm sorry, 432, 715. Yeah, 433. And that's up 4% from last year. So home prices continue to go up there. They continue to go up. Wow. All right. Thanks for suggesting that one. I would say it's a seller's market when I look at those. What's up, Robert? 43130. Well, look at this one. How you doing today? 43130. Oh, I looked at Lancaster. I looked at it earlier. Rewind the tape. I did that earlier today. I reviewed it. What's up, ARM? Is that adjustable rate mortgage? 45414. Clayton, and that's in Montgomery County. 32 homes on the market. Last year, 28. A little more activity from a listing standpoint. Again, you fell during COVID and you're trying to come out of the basement with inventory, but you're still stuck pretty much with no inventory. It's really extraordinary what the pandemic did, even before the pandemic, how inventory was just collapsing. I mean, in your zip code, inventory was collapsing all through leading up to the pandemic. And then it actually, I mean, it did go down, but it was already low. Was still inventory was crushed. Again, if you want a price decline, you need more inventory. If you see your inventory go back up, 50, 70, 100, then you know something's going on. And prices will probably follow the price decline. Let's look at pending ratio. Yeah, look at that. Pending ratio in 2020 was 3.42. So there were 3.4 buyers for every one home listed. And remember, nothing to buy, 12 listings or something like that. And so now you're at 0.75. So, it's cooled, but sellers probably still have the advantage. What about days on market? Yeah, we looked at that, right? 38 days. Single family home price, 237. Last year, 226. So it's up 4%. Higher for longer, man. Prices continue to go up. Now, if you look back in history at prices, you can see the last housing crash we had in Ohio. So in your zip code, in Clayton, in Montgomery County, $160,000, that's how much homes were in 2006. And watch what happened. They fell all the way to a low in 2012 of 96 grand. That's a decline of 40%. Yeah, 40%. So home prices fell during the great financial crisis about 40%, or in your case, $60,000 on the typical home. And remember, if you think about the inventory, right, that we saw in 2016, you had a lot of homes for sale. Well, you had even more in 2012. I don't have the inventory data going back that far, but you had a lot, and you still had a lot leading into 2016. That's why home prices were, where were they going up there? This isn't gonna let me do it. A couple percent per year, right? And they were stuck at like 106 grand. And then as your inventory was gone, prices just went through the roof. And that's why prices are higher now. So you can see the dip during the great financial crisis, is my point. And that's what a housing crash looks like in our state. History lesson. Thanks. Thanks, ARM. I frequently get, "We're desperate to buy your home" advertisements. Sure. I mean, they're picking on something. Either you have a lot of equity, or if you're an elderly person, they'll pick on you. If you have, If you're behind in property tax, they'll pick on you. Yeah, I mean, you're going to get those. People, I mean, a lot of investors throughout the U.S. look at the Ohio home prices and go, man, those are cheap. Unfortunately, they don't really understand the dynamics, especially with property taxes, and they can get crushed, but you're going to get those for a long time, I think. Mike, what's up? 45106. Let's do 45106. And if you're joining us, folks, drop your zip code below. I'll try to get to it. What time is it? How long have I been going? 1:43. I'll go for another 15 minutes or so. 45106. Let's do it. Bethel in Claremont County. Not a lot of data there. I don't like doing the data analysis when you only have 21 homes. There's just not, it's, you know, a couple homes here or there can swing the data a lot. So I'm going to go to a county level look, and that's in Claremont County. So have to do that. Now, if you're really, you know, if you're digging in, you really want to understand your market, you got to go hyper local into your zip code or your neighborhood or your school district and really dial it in. But from just a compass standpoint in the direction of the market, I'm going to use your county. So 381 listings this year, last year 280, that's a big jump, 36%. Good. You've got more homes on the market. You need more. Back in 2016, 695. That kind of tells you where inventory's traveled. You just need more homes. Need more homes. Pending ratio. You're at 0.90. So sellers still probably have some power, but back in 2021, they had all the power. It was 2.6 or 2.6 buyers for every home listed. A feeding frenzy, we called it. Now you're kind of coming back down to earth. But the damage has probably already been done. Yeah, look at days on market, 40 days. Homes definitely sitting longer. I mean, they're up, days on market's up nearly 40%. So you're probably seeing homes sit longer. What about price cuts? Not a ton of people cutting price, although it is a 10-year high for you. So I guess it's relative, but you do have people cutting a price in Claremont County. Let's look at single family home value. 343,000. Last year, last year was 334. This year is 343. That's up 3%. Enough threes in there? Up 3% in your home price. So typical home value, 343,418. That's typical, not all of them. But home prices keep going up there. Home prices continue to go up. What about in Claremont County? How many homes are they building? Latest data shows, it's not the worst I've seen. 4 homes per every 1,000 residents in Claremont County. 4 homes. Look back in this period of time. Look at June of 1999. People were scared about Y2K, right? But they were building homes, 8 homes per every 1,000 residents. Now, you have been growing that number over the last few years, but you're only at 4. Still not back to this level back here. And our population's actually increasing in Ohio now, right? We've got a net migration coming in. So this housing market could be difficult to buy, you know, at a reasonable price. It could be like this for a long time. Let's look at I'm curious about multifamily. Yeah, look at the multifamily permits there. That's 4. So you've got people building multifamily homes. I'm sure you're seeing that, and single family homes. 4 for every resident on multifamily, 4 for every resident. I'm sorry, 4 for every 1,000 residents multifamily, 4 for every 1,000 residents single family. Wow. So some building. That's good news. You're hoping for lower prices. That was Claremont County. Thank you, Mike, for jumping in. Jason, OU, 44256, selling and buying. 44256. Medina County. 113 active listings. This is a good zip code to look at. You have some inventory. Last year, 86. So as a seller, you have more competition. As a buyer, you have more to look at. Really, that's all it is, right? And since you're buying and selling in the same zip code, that's what it looks like. I'm assuming that. You have more choices. Again, as a seller, you've got more competition. But look at the pending ratio. You peaked at 2.15 back in 2022. So you had a lot more buyers than sellers, right? Double the amount of buyers in the market than sellers. That dropped, and now you're at 1.11. So as a seller, that means that you probably still have some leverage, right? It's not like you have to give your house away or your home shouldn't sit on the market for months by any means, but you still need to price it right. Don't be greedy and stupid and price it way over the market. Understand exactly what homes around you are selling for. Take some time, do some homework on it. And look over the last 3 to 6 months. Don't go back a year if you can help it. But right now it's one. So one buyer for one seller. And as a buyer, it means that I wouldn't expect that you're going to be able to get a massive discount or ask for anything, right? If this number was like 0.2 or 0.15, that means buyers have a lot more leverage. So that's pending ratio. Now let's look at your days on market. How long is it going to take you to sell your house? 40 days approximately. So don't expect your home to go into contract the very first week unless there's a reason why it would, a low price or something extraordinary about it. And expect that if you're trying to buy something, there's some time to go look at least. It's not, a day or 5 days or something. And then what about prices? Oh, those are the price cuts. 20% of all sellers cutting their price. So don't be one of these folks if you're selling. Don't be a price cutter person. Price your home so when you enter the market, people look at it and go, hey, look at that one. Let's go see it. That's what you want. You don't want people to look at it and go, man, this guy's nuts. I'm not going to go see that. Especially when it's new on the market and it's overpriced. People are like, why would I go see it now? I'll wait for them to come back to reality. So don't be somebody that has to cut the price. I mean, if you do, it happens, obviously. But if you can avoid it, much better. Single family home price $399. That's the typical house. Last year, $384. It's up 4%. Wow. So homes, when they do sell, are selling for more than they did last year, according to Zillow data. But don't use your Zestimate to price your house. I mean, it can give you kind of a compass of sorts, but don't say, there's my Zillow price. I'm going to add 5% or I'm going to use that price. Make sure you check all the comps. And even if you work with a realtor, ask them what comps they use to price your home. Ask them, hey, show me the comps you used. I want to look at them because you may see something they don't know. Like they could say, hey, here are the 3 comps I'm using for your house to give you the price. And then you look at it and go, well, this house here you have in the mix, but man, it's like it was destroyed on the inside. Like I walked through it, or I know who owned that, and the house had 10 dogs inside of it. And so you're not giving me a fair shake. Or they could be pricing your home too high, which sometimes is even worse. So ask them for the comps. And then as a buyer, I wouldn't expect you're going to get the deal of your dreams, but be patient. Don't be pressured to pull the trigger if it's not the right deal for you. Hopefully that helped. If it did, give me a thumbs up. If it didn't, then give me a thumbs up anyway. I don't think there's a thumbs down anymore. Let's see. Oh, this is cool. I also live in Hillsboro. A lot of people in Hillsboro and from Grove City area. A lot of Grove City talk today. Moved down in 2020. Love it down here. Good. It's nice to see another C-Bus local. Thanks for going over our market, Jason. My pleasure. The dude. He is the dude. I'm sorry. 45714. 45714. Let's look at it. Belpre. 23 homes. I'm probably going to use the county, dude, because it's a lot easier for me to analyze. Just more data in there. 109 active listings. Last year, 94. Again, just like other parts of Ohio, dude. Look at that. 187 houses on the market back in 2016. Again, I don't say this so that I rub it in or say, no, look how bad it is. I just want you to understand why the housing market is doing what it's doing. And it's a function of supply and demand. But when you look at this supply curve, you're like, man, it's just straight down. Year after year after year, fewer and fewer homes on the market. And now you are building inventory, but it's up 16%, but you're going to need years of that to get back to normal levels. Pending ratio, 0.59 right now. So buyers have some leverage. They do. If you look at 2021, it was nearly 1, and that was kind of when sellers had the most leverage. So now it's kind of falling back to reality. Look back in 2016, by the way. This is why you had a lot of inventory. The pending ratio was 0.12. It was basically like for every 10 homes on the market, there was only 1 buyer. Think about that. That's not very good. If you're a seller. If you're a buyer, you can really pick anything you wanted. A lot of listings, no competition as a buyer. And days on market back then in 2017 was around 70 days. Now it's 51 days. So you definitely had longer days on market back then. But now 51. So homes aren't rotting, but they're not moving in, a week. Let's look at price cuts. How are they? 20%, nothing extraordinary. Look at that back in 2017. Something happened because 26% of sellers were cutting prices. You had more inventory, more days on market. Definitely a strong buyer's market. Let's look at home values. 189,000. Last year, 181. Up 4%. So even though your inventory is growing a little bit, and that, gauge of buyers versus sellers is shifting more to buyers, your prices keep going up. I mean, a lot of this could be also, they say this, and I'm not an economist, but I play one in part-time, is that it's a devalue of the dollar, right? So dollars are worth less. So what back then was 180 grand back then was like, wow, that's insane. Now it's like, well, I mean, there are new trucks that are $125,000, new Chevy trucks, right? So it's maybe just the devalue of the dollar. And in a county like this, in Washington County, you may not see a massive or meaningful price decline. Let's look at permits. How are they in your county? Yeah, look at this. I mean, you're not building any homes. No homes, pretty much. I mean, obviously there are going to be some, but from a data standpoint, hardly any. And back in 2005 or so, 0.62, you still weren't building, but you were building more than you are right now. And they just dropped. Builders were like, nah, no more. And they can't build everywhere, but they are building near Columbus. That's Washington County or Belpre. I'm very familiar with that area. My father went to Shadyside. I lived in Shadyside for a while. 45714. Thank you for suggesting that one. Chris, what's up? 43160. I'm going to put yours on the table for a second. I want to see if anybody else is buying or selling. I can help. I'm looking. Here we go. Well, there's a lot of them. Well, you guys, man, I could stay on this live forever. One day I will. One day I'll do like a 4-hour live or something. Let's see. I'm just looking through the comments, folks. Oh, dude. Okay. You said you're selling yours next year. That's the one I just did in Washington County. So, I mean, it sounds like you should be able to sell as long as you price it right. Right? Don't be stupid and price it way too high. And I don't know if 225 works. You got to look at a local, area, hyper local, get with a realtor, you know, you don't, to interview a few and get a sense of what they think your house is worth is a good idea. Just get all that information. I always encourage people to interview a few realtors. I did Jason. Let's see. Here's one. Darla, what's up? 44437. And folks, give me a thumbs up if I've helped you or you're learning something. I hate to keep asking about that, but every time I do, somebody usually throws a thumbs up. 4, 4, 3, 7. McDonald in Trumbull County, huh? You only have 8 listings. Okay, so I'm gonna do a. You said you were selling, right? Yeah. So I'm just gonna go out on a county level. There's just nothing there in your zip code to analyze, really, which is fine. You live in a rural area. It's just the data is not going to make sense. So 340 homes on the market right now. Darla. Is it Dara or Darla? Darla. Yeah. Got it. Last year, 294. So you're up 16%. More homes. That's good news for you if you're looking to buy. If you're looking to sell, you have more competition, but it's not like it's was back in 2016 when you had nearly 1,000 listings. Then back then, you have a lot of competition as a seller. So right now it's probably, a normal type market or more of a normal market. Yeah, look, your pending ratio is 0.77. So there are buyers out there, basically 7 buyers for every 10 listings is a good way to think of it. But look at this. Pay attention to this. Look back in July of 2016, 0.11. Folks, that's what a market looks like with no demand. So if you look at that, remember 0.11, that means buyers have all the control. It's a buyer's market, not a seller's market. In 2016, and then I go to active listings, that's when you had a ton of active listings. Makes sense, right? But right now at 0.77, probably normalizing into a market that is typical that you'd see. I don't think that's anything to be alarmed about. And you should still be successful selling. Days on market, 40 days. So if it's 40 days in the county, that means that, expect that your house is going to take a little over a month maybe to get into contract. It may not be 5 days. Also, it probably shouldn't sit for, 60 or 70 days. As long as you price it right, comparatively to the sales out there, what's closed, not what's listed, what's closed, you should be okay. Price cut. Okay, they have more price cuts where you are in Trumbull. Look at that. 25% of all listings with a price cut. Don't be one of those people. And that's going straight up. This tells me that a lot of people in your county listed a home. Could be like big acreage. That happens a lot, right? Like a house built in 1900 on a bunch of acres and price is 600 grand. Buyers are like, well, unless I tear the house down. So that seller's cutting their price. Don't be one of these people. Price it right out of the gate. Price it right out of the gate. Because if you price it too high, a lot of people think, I'm going to start high, then I'll go low. But if you start too high, you may end up lower than if you started low to begin with, because buyers will just take shots at it. And the market, it kind of gets stale, right? And the market looks at it and goes, oh yeah, I've seen that house, for the last 3 months, they still can't sell it. So if somebody does make an offer, they look at the days on market and they go, it's been on the market, 90 days. They've had 3 price cuts. I'm going to offer this price way down low. So price your home right. Thanks for checking in, Darla. And I think you'll be fine as a seller. Clippity clip. We see this a lot in our region where some houses are only showing 30 to 60 days on market, but they are on their 3rd or 4th relisting. One house had a total of 749 days on market under 4 MLS IDs. That happens a lot. It does. It's happening more and more. I do have something on the data set that y'all can look at. I don't go through everything, even though it seems like I do, but I have something here called delistings. So you can look at delisted homes, and this shows you the percentage of homes that are removed from the market, like you're talking about. I also have one called relistings, but that's not loaded yet. I plan to get that in the next couple of weeks. But what you're talking about, clippity clip, is very common. Sellers will remove the house from the market and a lot of times relist with another realtor because it's the realtor that will sell your house, right? Wrong. It's the price that will sell your house. That sells your home. If it's priced correctly, people will buy it. If it's priced incorrectly, the market will punish you. In a normal housing market, that's how it works. So sellers oftentimes, the delusional ones, will list at a price that makes no sense. And then they get mad when nobody's buying it. And then they think, well, it's the realtor. So they'll hire another realtor and often put it on for the same price. And then they get upset when the thing doesn't sell. And it's like, well, what did you expect? There's not one buyer. I can't imagine a situation where a buyer is going to buy a home because of a realtor. Like, oh, you switched realtors, I'll buy it. It was overpriced before, but now that you switch realtors to Jason, I'm going to pay that price. Wrong, wrong, wrong. Does not happen. It's the price, folks. So this happens. It will all the time that people remove it and put it back on. Just watch it. Now that you know, great information, right, Clippy? Good job bringing this up. Watch for that. Look at the total, the combined days on market. That's what you'll see, that is CDOM, combined days on market. Now, one thing I just thought of, and I'm wondering, does the data I'm showing you, is that combined on market, or is that only what the current listing shows? That I don't know. That I'm not sure about. I'll reach out to him and ask. We'll find out. Thanks for bringing that up. Westlake, selling, please and thank you, 44145. Let's do it. 44145. Up north, huh? Westlake. 50 homes on the market. Last year, 61. You've lost 9 homes. You're down 18% on listings. That's not helping you. No, if you're selling, right? Didn't you say that? Selling, right? Yeah. That's good for you, right? Less competition out there. Less competition. What's going on with pending ratio? We can see up here it's 1.08. That sits here regardless of what we're doing. It doesn't move. So it's higher right now. It actually swung upwards from last year. So that means you have less competition, or you have more buyers in the market than you did last year. As a seller, that's what you want to see. The peak was back here in 2021. It was 1.71, which is not, we've seen over 2 today. We saw over 3. We saw over 4 today. Well, that was insanity. But this was still, back in 2021, a strong, very strong seller's market. I think you're still probably in a seller's market. Days on market. Yeah, look at this. It dropped over the last couple of years, 41 days. So you're kind of still in the driver's seat as a seller, but doesn't mean you can egregiously overprice your home, though. Price cuts swinging up fast, nearly 20% now. Now, the 20% isn't bad by itself, but that's upswing of price cuts tells me that sellers are going, all right, nobody's going to bite at my insane price. I better lower it. So don't be that person. I gave that speech a little while ago. Right? If you're a seller, price it right. Single family home value. 486. Last year, 469. Up 3.5%. Higher for longer. I mean, these prices in Ohio just don't want to come down. They just don't want to. Overall. I mean, it's probably another all-time high. Yeah, look at this. 3.5% up year over year. You haven't been negative. Last time home prices fell was back in 2012, October of 2012. And ever since then, they've been higher and higher and higher. This period through here, by the way, folks, is what really wrecked us in the housing market from a price standpoint. Really, in 2020, you can literally see people we hit the pandemic, people froze, and then the market went on fire. And it's just like up, 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 up. In fact, if you look at July of 2019 to July of 2022, in 3 years, home prices are up 30%. In 4 years, they were up 40%. Right? And now they're up 50% since July of 2019. And it looks like they want to keep going higher. It looks like the S&P. It's just like, it can't go higher. Yes, it can. And it does. And you're like, man, when's this thing going to end? May not. But you know what? Let me look at your, what county are you in? Let me look at the county. Yeah, you're in Cuyahoga County. I just want to look at the permits. So right now in Cuyahoga County, 0.54 permits per 1,000 people for single-family homes. That's it. That's not a lot at all. That's crazy. Back in, 2000s, they were building 1.3, 1.5. There was some building. Then that thing shut off. All right. But as a seller, just to end that up or wrap that up, Robert, as a seller, I think you're fine. You should probably do pretty well. Just don't get greedy. There would be a massive influx of inventory if municipalities started making transient rental of former permanent housing less profitable. Started making transient rental of formerly permanent housing less profitable. I'm not sure I follow what you're saying. I don't know if I understand. Torquinator. That's pretty cool. Are you a mechanic? Or you're into cars? 44615. Let's look at it. Only 25 listings. Sorry, I'm going to have to go to that county level look in Carroll. 70 listings in the entire county, 62 last year. You've got 8 more homes. Better than nothing. You're still way down in inventory, though. Pending ratio, how many buyers and sellers? You're at 0.61. So sellers probably have, I guess buyers are probably gaining some leverage, but it's not a complete buyer's market at all. July 2021, it was 1.44. Sellers completely in control. And that's what wrecked the market. I mean, it's not the seller's fault. It's the way market dynamics happened, but sellers were calling the shots then. Days on market, 43 days. Last year, 49. Homes are selling quicker than they were last year. Price cuts, 21%. That upswing again we're seeing, and this isn't seasonality. This is July. These are all Julys, these dots. That's how I do it. So if you look at this compared to last year, you've got a lot more price cuts. A lot, what's that? 7% more price cuts. This is basically 2 out of every 10 listings. The sellers cut the price. Did you tell me what you were doing? You didn't tell me. If you're buying, probably see some discounts out there. If you're selling, just don't be one of these people. Right? Homes will sit longer when you have to do a price cut. Let's do prices. Single family home value. 208. $208,000 in Carroll County for the typical house. Last year, 191. This year, 207. That's 8.4% up year over year. Is that right? Wait a minute. That can't be right. Is that right? Yeah, it is. Wow. Come on. What's going on? Yeah, 8.4% up. Man, prices just keep going in Carroll County. How many single family permits do you have? None. No building. I mean, to be fair, they weren't building earlier either. When I say none, I mean there are probably some the data doesn't capture, but it's not, at scale. That's Carroll County. Thanks, Torquinator. Arthur's Roundtable Society. Is that like that place where you go have dinner and like in Myrtle Beach or Las Vegas? What's that called? I don't remember. Or you go and you eat and they do like jousting. Is that what you're talking about? Carol wanting to buy 43606. Let's do it. Do a couple more and then I'm out of here. Toledo. What do you got? You got a little inventory, 44. We could do this one. 34 listings last year, 44 this year. You've gained 10 listings. Good. If you're a buyer, and just for a healthy market, it's good to have that. Now, let's go to the ratio. Pending ratio is 0.68. Last year, 0.76. So buyers are gaining leverage. They are. It's cooling off slightly. Days on market for you, 32. Last year, 27. Homes sitting longer. Homes are sitting longer. Yeah, you can see that in the pending ratio. Let's do price cuts. 18. Last year's 10. Not a lot of price cuts. Under the typical price cut of Ohio. Now let's go to single family home value, 200,000. Last year, 189. Prices are up 5.5% year over year. Wow. It's probably an all-time record high for you in home prices. They don't want to come down. And they probably won't until you get more inventory, until you see this number swing up. So if you're buying, you said you were, right? You're looking to buy. Well, you just need more homes for sale or you're going to have to look somewhere else. Because you're probably not seeing a lot that makes sense. Prices are still going up. And while you are gaining leverage as a buyer, it's not like it's, hey, I can just do what I want, make an offer, somebody's going to accept it. Sellers are begging. There's not a lot of price cuts. So I would say you're probably, you're going to have to be patient, maybe make a lot of offers, and maybe be willing to buy something with some work that's needed, right? Something that maybe, kitchen's outdated or really outdated. Most things can be fixed in a home. About everything can. So if it has a bad basement, you can still have that fixed. Just negotiate it with the price. But definitely seek a local real estate professional who understands your specific neighborhood. That helps a lot. All right. That was Toledo. Cool. Good little zip code to do. Uh-oh. I messed up. I did 45415, not 45414. Yeah, there's just nothing there, though, in that zip code, really. Did I do Montgomery County already? I don't know that I did. Let's do Montgomery County. That'll give you an idea too. But that other zip code I just looked at, 45414, nothing there really as far as inventory. I usually don't want to do anything under like 30 listings or so, or 35. Just very hard to look at the data. 1.2 thousand listings right now in the county. That's a lot, right? I mean, comparatively to COVID, you only had 537. But look back in 2016, there were 2,500. Imagine that. Right now, to have another 1,300 listings in the county, there'd be homes all over the place for sale. And let's look at that pending ratio for Montgomery County, 0.78. Last year, 0.90. So the market is cooling. There's no doubt about that. It is cooling. Days on market, going a little higher, 38 days. Let's look at prices. 209. Last year, 201. Prices are up 3.7%. So they're basically keeping up with inflation. So from a real standpoint, nominal, if you just look at the number, they're up 3.7. But real price growth is basically flat when you think about inflation, right? And that's Montgomery County. But home price is still going up, not slowing down. I mean, the growth is slowing down, but the prices continue to go up. Continue to go up. Wow. Thanks for suggesting that one, though, or catching me in my error. Hey, you're welcome, Lone Alexander. This is a great point. Airbnb transient rental of permanent housing got big in 2012, which seems to correspond with the dates of the dropping inventory. Transient rental is one of the main sources of the low inventory. Yeah, so I'm not going to argue with you that the increase of, well, it would really just be the fact that, and I'm an investor, keep that in mind. So, you know, but I'm self-aware enough to understand that investing in real estate became big, like mainstream big, around 2012, 13, 14. Institutional investors like Blackstone in particular came in at the request of the federal government, by the way, who gave them 0% interest loans to come in and buy up all the foreclosures. That basically stopped the bleeding of home prices in 2012. Home prices in 2012 and whatnot in the US, including Ohio, were crashing. Well, the government was like, we can't have this. Well, what can we do? So they went to Blackstone and other big companies like that and said, well, I'll give you a crazy loan to come in and buy up all these foreclosures and rehab them and keep them as rentals. And they did that. And when that started, when that, I don't know, horse was out of the barn, you could say, everybody else started doing it. And so I can't deny that the hyper financialization of the housing market caused inventory to plummet in a lot of areas. I can't deny that. I think that's a cause. That's definitely a cause of it. Now, I don't know if Airbnb is the biggest cause of it, but overall, the hyper financialization of homes going from places to live in to places to make money from changed everything. But it wasn't just housing, obviously. Private equity owns dental offices now. They own veterinarian offices. They own automotive places. They own, I worked for a company that was purchased by a private equity company back before I became a realtor. So they own all kinds of stuff. But the point is, in housing, changing it from something you live in to something you make money from, that is a whole new ball game after that, folks. I don't think that's going to change. I mean, even if the housing market does crash from like a price standpoint, what I think you'll see as prices come down, somebody's going to step in and buy that house. Because they know that we're not building enough of them right now. And we're not, no matter what you hear from other people on YouTube, just look around you and ask yourself if there's enough to buy. It doesn't matter if they're built and rented. That's not available. Available homes to purchase or rent, are there enough of them? Most people would say no. Even if people have 2, 3, 5, 10, 50, 100 houses. If they're not available, they're not available. So we need to build more. And I don't know that the financialization of the housing market will ever end. It may not. That's my opinion. Tell me what you think, though. But thanks for bringing that up. Elgood 2011. BlackRock, etc. Right. So Blackstone, doesn't really matter, but Blackstone was like the people that came in. That's the company that came in and bought everything. BlackRock, interestingly enough, facilitated a lot of the sales as kind of like the, I don't know, the manager of the sale, the broker of the sale, if you want to call it that. They probably did some of the financing too, but a lot of it was government financing. And the government begged the investors to come in. And by the way, they did not ban them recently. The Road to Housing Act, I did a video on my Ohio channel about it. The Road to Housing Act does not ban institutional investors. That whole thing, that executive order from Trump, you got to look at the actual bill. All these large investors can do everything they were doing before. Basically, there's carve-outs, there's loopholes. That grift is not changing. And I'm an investor, and I'm self-aware enough to understand it. Anyway, that's a history lesson on the great financial crisis. What up, tech girl? In CBUS, the corporate realtors are offering $35,000 to $40,000 under market rates for middle-class homes. The corporate realtors are offering $35,000 to $40,000 under market rates. You mean like they're discounted, like the homes are being discounted? I'd like to know more about that. But good to see you, tech girl. I hope you're well. Clippity clip. Thanks for the info, and the delisting filter adds another metric. You're right. You're welcome. I'll add more. All right. I think I'm done for today. I'm wiped. I am wiped. Hey, it was good to see everybody. Thanks for hanging out. I always learn a lot. It always makes me think about how I can add more value. Again, check out jasonferrier.com. Check out my website. Now, something I didn't mention earlier is I have a market update. Not the housing data, but I actually do these newsletters. You can subscribe to the newsletter if you want. On my website, you can subscribe. But if you go to like this one I just wrote last week, and it's just a deeper dive into different housing market issues or, housing updates. This one's about, is it a good time to buy a house right now? So you can go through this. I have a lot of good, I think it's good information in here for you. But if you come down to the bottom, you should be able to subscribe. Yeah, so right here at the bottom, you can put in your email, subscribe to the newsletters. And then if you want the data, the free data, folks, just go to the data set at the top of my website, jasonferrier.com, click data, and you can come in here and look at all the stuff that I was looking at today. So trying to add more value, trying to help you guys out. And if you want to buy or sell in Ohio, even if it's not in Central Ohio, and you want to talk, reach out to me on my website, fill this out, contact me, and I'll give you a call. We'll set a time. But I hope you have a great weekend. It's a beautiful day today. Get out and enjoy it. First football game tonight, high school football. Always a great time in Central Ohio when you have high school football. So have a good one. We'll see you next Friday. I am the Ohio Housing Nerd, and I am out. 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 See ya.